Why SMSF might be right for you. You know that you can use your super to buy an investment property, take out a loan, and potentially pay zero tax in retirement. If your combined super is around 200,000 or more, this could be a turning point in your wealth journey. Hi everyone, my name is May Reyes of Reyes Group Australia. A self-managed super fund or SMSF is a private superannuation fund that you manage yourself with full control over where and how your retirement money is invested. Unlike retail or industry super fund, which limits your investment option, why 200,000 makes the timing right? Here's why. It covers the cost of setup and ongoing admin, about $2,500 to $8,500 per year. You'll have enough left to invest and stay diversified. Here's the exciting part. You can buy an investment property inside your SMSF using borrowed money through a structured code limited recourse borrowing arrangement, or LRBA. It means the loan is limited to the property. The lender can't touch your other SMSF assets. All rent from the property goes into your super fund. The rental income is used to repay the loan, grow your fund, and build wealth over time. You can't live in the property, and neither can your relatives. But it's ideal for long-term wealth and retirement planning. Imagine owning a 600,000 property today, using your super without affecting your personal borrowing capacity. Here's what makes SMSF incredibly powerful. Rental income is taxed at just 15% compared to up to 47% in your personal name. If you sell the property after 12 months, you pay only 10% capital gains tax. And when you reach retirement phase, generally from age 60, all income and capital gains in pension phase becomes 100% tax-free. Let me repeat, zero tax. That's why SMSF are considered the most tax-efficient structure in Australia for long-term investing. Even your employer contribution and investment income stay taxed at 15%, the lowest fixed tax rate available. But this isn't a get-rich-quick scheme. When you start an SMSF, you become a trustee, meaning you're responsible for following super law, which is known as the SIS Act, keeping records and financial statements, submitting annual tax returns and independent audits, having a clear investment strategy. This is why having a good accountant, mortgage broker, and property advisor is the key. We help you stay compliant while building long-term wealth. If you have the right super support team, SMSF are manageable even for busy professionals. When SMSF may not be right for you, SMSF aren't for everyone. It may not be right for you if your super is below 150K in total. It may not be cost-effective. You want a set-and-forget approach to investing. You're not willing to engage advisors or learn basics. Also, there are strict rules. No personal use of assets, no borrowing outside of specific conditions, and no mixing with personal money. That's why it's essential to get advice before setting up one. To recap, an SMSF lets you invest your super in property and other assets. Use loans to grow faster. Pay just 50% tax or 0% in retirement. Have full control over your future wealth. If you're already actively investing outside super, SMSF could be the missing link to building tax-free wealth in retirement. Want to know if SMSF is right for your situation? We offer SMSF setup with corporate trustee, property strategy, plus lending support through LRBA, annual compliance, bookkeeping, and tax. Message us by putting SMSF 2025 or visit www.reyesgroup.com.au to book your free SMSF consultations today. Again, my name is May Reyes of Reyes Group Australia. Your super is your future. So let's make sure it's working as hard as you are. Please like, share, or tag someone who needs to hear this.